Organizations are increasingly paying focus in implementing the tax governance framework to ensure that tax controls are in place, tax risks are managed and escalated, where necessary, to the board for consideration. A wide range of issues relating to tax governance are also of interest to investors, and hence tax transparency is in the spotlight today.
The MICPA, together with the MIA, actually issued the Tax Governance Guide sometime in October 2021. And that particular initiative to issue this particular guide was initiated largely because many of us, including myself, being a tax practitioner, felt that the need for tax transparency needs to be escalated, needs to be enhanced. And when we say tax transparency, we mean sharing more with stakeholders. And in particular, the Tax Governance Guide was focusing on reporting in the form of either the annual report, in your notes to the accounts, or even reporting via placing a document on the website of an organization. So MICPA therefore, and MIA therefore took the lead to initiate this document. And the reason why we also felt the timing was right was because of developments that were occurring in the international field of taxation. In particular, there were things happening around cooperative compliance, things happening around international tax developments. For example, the OECD issued their base erosion profit shifting initiative sometime earlier, and they were continuing doing their work during that period. There was also a growing sense of governments around the world cooperating to cut down on what they consider aggressive tax planning, tax evasion and so on. So there were global initiatives going on. So a lot of awareness on taxation was coming up. And there was a concept being talked about which was known as tax morality. And that really precipitated a lot more discussion about the tax obligations of a taxpayer. And so we felt that the Tax Governance Guide would be a good document to issue to our members. And actually, in particular, we issued it out meant for listed companies on the stock exchange. And the idea was to share more with your audience, with your stakeholders, with your shareholders, with whoever it is that the companies deal with. So that was the initiative that the MIA, MICPA did with regard to the Tax Governance Guide. Now, the key building blocks of this Tax Governance Guide, there are probably about 6 of them. I mean, one of them is the tax strategy. Tax strategy of the organization has to be stipulated. The second thing is about the roles and responsibilities with regard to the tax function. How is it divided within the organization, and who is responsible for what? The third one is about, I think, to do with tax risk management. How is the tax risk management function managed within an organization? And what are some of the principles that are being adhered to by the organization? After that, the next building block is tax reporting. This is actually about what you're sharing, what you're reporting, what you are publishing with regard to these aspects of taxation and the tax role, the tax function, the tax management system that you have. And the last one in terms of building block is that of tax assurance. This is about getting a third party, probably an independent party, or it could even be anyone else, but looking at what you are doing with regard to tax governance and giving a kind of a responsibility statement or an assurance that what you're doing is appropriate, in line with the various requirements or standards. So those are the building blocks. When I say requirements or standards, remember that within the context of Malaysia, we don't have a mandatory requirement to share more with our stakeholders. It is all a voluntary thing that companies can do. When we say reporting standards, we are referring to the best practices. I think that the gold standard is the GRI, Global Reporting Initiative. And there is GRI 207 on tax, and it gives you a whole range of information that can be shared, can be disclosed or reported by a company. So that's the gold standard that we refer to. Now the second part of this thing is about what are the challenges companies or corporates would face with regard to, let's say, applying this tax governance guide. I think the challenges really are probably a few. One is you need to get the right personnel who can manage your tax function. And so talent is obviously an issue. Getting good people who can run the tax function within your organization. That's given, I think, in any organization. The second thing is about knowledge. And although you may get persons to do the tax function or to carry out tax function in your organization, the question is the knowledge that they have, and therefore experience comes in. So we need to make sure that we have experienced people within your organization who are well versed with taxation and who can do this. The third one is about awareness. I think taxation is not about reading a book and understanding everything there is to know. You need to be aware of what's happening around you. You need to be aware of events. You need to look at the websites of the tax authorities, look at latest standards or public rulings, guidelines. You need to be also aware of various dialogue sessions, the minutes that come out and so on. So you become then aware of a lot of things happening. In addition to that, you need to be aware of what's happening internationally, because the tax function is not a local function, particularly if your organization is involved in regional activities and international activities. So they're trading across borders. They are reporting in different countries. They need to adhere to the laws of the relevant country. So international taxation comes in the picture. So challenges, therefore, will revolve around personnel, revolve around the knowledge, and it will revolve around the awareness of this particular workforce that you have in your organization, who is then entrusted to perhaps help in making sure that the tax governance approach of the organization functions well. Now, with regard to why is tax governance now something that is elevated in its ranking as a boardroom agenda item, I will go back to a little bit in terms of the past as to developments in international taxation and this issue about tax transparency and so on and so forth. So I think I recall that one particular incident that happened which was given good mileage in the newspapers, was that of the Starbucks episode in the UK, and many years ago, where it was alleged that Starbucks was not paying any taxes in the UK for many years, despite the fact that it was actually doing very well in terms of sales. And so this particular issue somehow got elevated. Some NGOs focused on it, and it in fact went right up to the Parliament in the UK to discuss. And some kind of a meeting or let's just say a session was held with Starbucks and so on by certain MPs of a certain committee in Parliament, raising this issue about how is it that they're not paying any taxes in the UK. Now, we're not saying that there was anything illegal about this, but that elevated this issue about taxation and about the concept of tax morality. Now, this is all about paying the right amount of tax, paying your share of tax if you are making profits. But I must come back to the Starbucks issue in the UK. Starbucks in the UK were making very good sales, but they were not showing any profit. They had some losses here and there, and that is largely because of lots of expenditure that was going out. And that was the element of transfer pricing. And in terms of paying for intellectual property rights, paying royalties, and so on and so forth, brand name, all these were expenditure items. So in the end of the day, it ate away at your profitability. So that was the reason why Starbucks was not paying any taxes, not because of anything illegal. I just wanted to bring to the attention of the audience that was one of the first episodes where these things came up. Then another episode was about technology companies in the UK, in the US. When you look at the top technology companies, Google, Apple, and so on, there was also an inquiry about how is it that they're not paying any taxes. And well, that's largely because they're making losses. But this has become something of an international phenomena. Then subsequently, there was some release of papers, and I think we call it the Panama Papers, the Paradise Papers, and so on. There were three releases where certain NGOs again got this information and started releasing it out to the public, and giving a list of names of companies, individuals, politicians, celebrities, and whatnot, who were having accounts in various tax haven locations or low tax jurisdictions. So that again became a big issue in terms of how is it that so-and-so, some politicians are having bank accounts or having companies which are located in low tax jurisdictions. Again, a reminder, it is not illegal to have such companies. There's nothing wrong with having bank accounts in low tax jurisdiction countries, whether it's the Cayman Islands or Bahamas. There's nothing wrong with this. The question is really about are we carrying out commercial transactions and the rationale of why we are using those particular jurisdictions. I think these things can be explained by many, but there may be some who are trying to hide their income or the sources of income by parking this particular funds in low tax jurisdiction countries, whether it's Jersey or Guernsey, Bahamas, and so on, and keeping it hidden from perhaps the tax authorities in their home country and not reporting it to their home country. So things like this. So that is fundamentally why tax has become an important item. And so when you look at companies around the world, they themselves pay taxes in different jurisdictions. And in Malaysia, we have a 24% corporate tax rate. So taxation takes a significant part of the profits of a company out and pays it to, and you get it paid to the tax authorities in your relevant countries. So taxation, therefore, has become important because of the media focus. And so as a result, you find that a number of organizations started to make sure that they have talent, people, adequate knowledge to manage their tax function. Now, we're not saying that the tax function was not managed well. We're just saying that because taxation became a strong focus by tax authorities, by the media, therefore companies, especially multinationals, made sure that they have the relevant skills and the skill sets to manage the function. So this is why taxation now, I have no doubt about this, that taxation now is a very specific boardroom agenda item. And in particular, when you talk about a boardroom, we refer primarily to the audit committee. And why? Because the audit committee has the mandate to look at the financial statements of a company. And therefore, taxation is part of the finance function. So in some of the boards that I sit on, where I am a chair of the audit committee, I have initiated reporting from the finance people about taxation. In particular, we tend to look at, are taxes being paid on time? Are you deducting salary taxes from your employees, and are you paying it over to the tax authorities on time? Are we subject to any penalties for late payments? Have we had any tax audits, or has any tax audits been initiated by the tax authorities? What are the outcomes of such tax audits? Did we end up with a higher tax bill to pay to the tax authorities? Were there any penalties imposed? Are we doing things in accordance with the law? Are we being aggressive in some areas? Is this something that we can defend? Do we get proper advice from the tax advisors where we need to? Internationally, are we functioning? Are we managing our tax function well? So these are the kind of things that the audit committee perhaps should be aware of, and should be asking their finance people, finance team to report on a regular basis. In most of the boards I'm on, we probably just have a quarterly reporting to the audit committee in terms of these functions. How is it going on? And so with regard to tax governance itself, I also wanted to point out that the Inland Revenue Board subsequently in 2022 issued its tax corporate governance framework. And I must say that this tax corporate governance framework is a very good follow-on to the tax governance guide that the MICPA and MIA issued in October 2021. And remember again that the tax governance guide issued by the MICPA and MIA was fundamentally looking at reporting of your tax function. How effectively are you managing your tax affairs? Whereas the Inland Revenue Board's TCGF, or Tax Corporate Governance Framework, was looking more at the detailed controls, the checks and balances, how your tax function is done and managed. And therefore, things like the checker, maker, approver, and are you managing the tax function well? Are you extracting information well? Are you filling in your tax return properly? That's the IRB's focus and the TCGF. And they also specified there needs to be clear demarcation of who does what and what risks are managed and so on. And somewhere in the TCGF, it does also mention that perhaps the board or the audit committee should also have an oversight over the tax function of a company. Now, with regard to benefits of this tax governance framework that the IRB issued, what is the benefit to the IRB, and what is the benefit to perhaps the company itself from a macro and a micro perspective? Very quickly, I think as far as the Inland Revenue Board or the IRB is concerned, they have started to focus on the fact that we just need to make sure that corporate tax affairs are managed well by a company. This is really what the TCGF is about. So, which I think is has a very sound basis, and to benefit to the IRB is simply that if companies follow the tax corporate governance framework in terms of having the controls, checks and balances and so on, and is structured properly in the organization, then I think what happens from the IRB's perspective is that once they have validated it, they then have comfort that the system is working. So the single most important benefit that the IRB will have is that I have a comfort that the company is managing its tax function well. And therefore, when I have that comfort, I trust that the taxpayer is fulfilling his obligations properly, and therefore hopefully reporting their tax affairs in a better manner and it'll be more accurate and so on. So that's what it is. And this particular tax corporate governance framework is all about trying to build trust between the tax authorities and the taxpayers, in this case, the corporate taxpayers. And this goes back to the concept that I mentioned earlier on cooperative compliance. So now when you look at the benefit to the corporates themselves, the taxpayers, the benefit to them is the TCGF that we talk about has stipulated a number of benefits to taxpayers if they sign up to be part of the TCGF initiative. Now, by the way, signing up doesn't mean you just put your hand up and you're signed in. Signing up means that you have to do the relevant documentation, the processes, you get it validated, prepare a report, submit it to the IRB, and IRB will then probably validate it by maybe visiting you and checking whether things are in order. So if you qualify through that particular route, for the company itself, there are some benefits that the IRB has stated very clearly in the framework. An example of some benefits that we could have is the fact that a designated IRB officer could be allocated to you, to your company, to deal with you on certain specific tax issues that you may have. Now that is a benefit that the company will value, because it means that if they have a certain transaction that is a little bit doubtful, whether it's a deductible expense, maybe it's a 50-50 kind of a feeling you have, and you can then call the officer concerned in the IRB, have a discussion, and perhaps come to a resolution and decide on what is the status. So that itself means you don't wait until you file your tax return, you call the person when you have an issue. So that's one benefit. The other benefit that arises is also there could either be no penalties or there could be very low penalties if you then have to file an amended tax return because you found out that there was some error, some oversight, and you now say, I want to disclose it and I'm now reporting it. You may be allowed to do it without perhaps paying the statutory penalty that applies to everyone who normally files an amended return. And the other thing also about this TCGF is that once you are a member of this particular initiative, it can also mean that there may be a promise made. Now, the IRB hasn't promised this, but there could be that they may say, we will not do a tax audit of your organization for a period of time. And that itself, I think, if that works out in Malaysia, that would be a very great initiative. So that, in a nutshell, are the benefits that the IRB gets and the corporate taxpayer gets. But at the end of the day, it is all about building trust and being comfortable that your tax function is managed well so that the IRB has greater trust and therefore can focus on other areas rather than worrying about this particular corporate taxpayers, tax affairs, and therefore being able to educate others in terms of fulfilling the obligations. Now, as mentioned earlier, when you look at this tax governance framework, we have used the term tax transparency. And just to go back in terms of this particular term, tax transparency, I just want to point out there are two aspects to it. One is about tax transparency in terms of your reporting and sharing with your stakeholders, putting things on a website, putting things in an annual report and so on. The other is being transparent to the tax authorities, and transparent in the terms of having your controls in place, documents in place. IRB can come in and validate, and they have access to all the documents and so on. So there's an element of trust that is developed between the IRB and the corporate taxpayer. Now, when you're looking at that, the next question really is, what more do we expect the IRB to do or to implement with regard to tax transparency? Now, one area that we have all heard about recently is this area of e-invoicing. And e-invoicing is also about transparency in terms of your invoice, in terms of your purchase or your sale document being accessible to the IRB because they validate that in real-time basis. So that's one aspect of transparency that we already have started seeing. The other aspects that we can expect the authorities to continue to focus on is perhaps looking at trying to introduce more simplification in terms of the tax laws. And simplification means making it easier in a way that may not be tied to transparency, but making it easier means making it easier for everyone, and therefore you're able to do things faster and better, we hope. Other aspects that we think in terms of transparency that the authorities may be forthcoming with is actually being more willing to issue more detailed or more relevant public rulings, and perhaps more engagement with the taxpayers and the professional bodies so that public rulings are much more robust in terms of what it covers. And the other area that I think when you look at transparency is all about sharing information. I think the authorities will continue to focus on voluntary disclosures, allowing companies to come forward, disclose errors, and so on and so forth. But those who are in the TCGF may not pay penalties or may pay low penalties, but the others who are outside the TCGF may end up paying the 45% statutory penalties that we have. But ultimately, with the TCGF spreading its wings and more companies becoming part of this framework, then I think the benefit of tax transparency extends to a wider audience. So I think in the end of the day, when we say tax transparency, we are referring to more and more companies, more and more taxpayers coming within the TCGF framework. So right now, it's a few large companies are involved. Listed companies perhaps are part of the pilot group that has just completed its work. And now slowly you'll find that more and more companies could be part of it. The other aspect, of course, we all need to be aware of is there's a cost to all this. And this is part of the compliance cost, because to do the documentation in terms of meeting the TCGF framework, you may have to spend time writing out all the relevant policies and procedures, documenting it, having a tax strategy statement, putting something on your website in terms of a risk appetite with regard to tax. All that does incur cost, but I think that's cost well incurred, because it is actually protects you from aggressive action by the tax authorities in the future if you are part of the TCGF framework.